Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news of some speed wobbles appearing around the world. Yesterday, stocks closed down sharply in Shanghai. They lost a whopping 2.5% on the day, wiping out a cumulative 20% of value since the beginning of the year. Some other markets like Tokyo and Korea were also hard hit, falling almost as much. Cumulative concerns about trade tension fallout is behind the rapid shift in sentiment. New Zealand and Australia closed about even. This morning, Wall Street is also unaffected. Worryingly, all this China dump comes after their central bank eased credit requirements for banks and after authorities intervened in their currency markets. All to no avail, it seems. Today's market responses will be watched closely. In China, new data released by authorities there shows that the country owes the rest of the world more than $1.8 trillion in debt. That is up 7.8% from the end of 2017. The issuing of US dollar bonds by corporates is a growing share of those liabilities. As a reference, that compares with $1.2 trillion in US Treasury assets that they are currently holding. One optimistic note is worth reporting. China may have passed its carbon dioxide emissions peak. In fact, their peak may have been 5 years ago. A new report says that they're on track to decrease them from here on out. In Mexico, a left-wing candidate has had an overwhelming win in presidential elections. The key focus in those elections was corruption, and is unsure what impact his ascendancy will have on Mexico's involvement in the TPP or NAFTA. Although early signs are that a revised NAFTA deal may be easier now. Adding to policy uncertainty, the MMP coalition government in Germany is looking a little shaky. In Australia, concerns are growing amongst analysts that the turn down in their housing market values may be indicating something more serious. There is talk of a nasty cycle developing, one that may see the RBA need to trim official rates there. Commodity prices are starting to fall. Copper is down to a 7-month low and has fallen 8.5% in a month, albeit from 4-year highs. The rise of aluminium prices seems to have run out of puff, and dairy prices look they will be soft again at this week's auction too. US Treasury 10-year yield is marginally firmer at 2.86%, that's up 1 basis point in New York. The Chinese 10-year is at 3.49%, and that's unchanged, while the New Zealand equivalent is now at 2.86%, that's down 2 basis points. And gold is down sharply, down $10 in New York to just $1,242 an ounce. That represents a $100 drop, or 8% in just 90 days. And US oil prices remain high and unchanged, and now just under $74 a barrel, but the Brent benchmark is down more than $2 today at $77.30 a barrel. The Kiwi dollar starts today below 67 US cents. That is its lowest level in 27 months, and a steadily declining confidence in our currency. A cumulative fall of almost 9% since the September general election. On the cross rates, we're now at 91.5 Aussie cents and at 57.7 euro cents. That's a 7% drop. That puts the TWI at just 70.6, also almost a 7% decline. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.